Hi everyone. I'm your host, Accidental Investor Prince. So I welcome you all to the Long Thought video series, episode one. So we are fortunate enough to start with a very great and interesting team of three people, namely Navid, Sanjay, and Parth. And they are so a very warm welcome to the Bastion team. Navid, over to you.
Sure, sure. Thank you, Prince Bhai. Thank you for having us. Thank you for giving us the opportunity. We are grateful to be here. So we'll start with the strong business, right? And here we have a quote from the legendary investor Warren Buffett, who says that when a management with a reputation for brilliance tackles a business with a reputation for bad economics, it's the reputation of business that stays intact. Now, of course, in the Indian context, we have something which is coming, something very different, which is coming in the further slides. But sticking to this slide, Mr. Buffett says that when a good management is, trying to run a business which is, which has bad economics, it's the economics of the business which stays intact. So therefore, we say that we want to invest in businesses which are strong. Now, what are strong businesses, right? Let's try to understand that. So, as far as strong businesses are concerned, we have divided strong businesses into qualitative as well as quantitative characteristics. So, I think without further ado, we'll dive into examples. So, firstly, we'll discuss qualitative characteristics where we have a brand recall. Now, a business which enjoys a strong brand recall, in our understanding, uh, is a strong business. Now, right now, I'll hand it over to Part to give you an example of PV FinTech.
Uh, so, when you search, simply go on Google and search for buy insurance online. So, other than if you were to ignore the sponsored ads, right, the first link that you will always see is of the Policy Bazaar, right? As you can see, we have highlighted here. So, this shows that the kind of brand recall and that the PB FinTech has, Policy Bazaar has. And if you were to even, correlate that to the website traffic data that Policy Bazaar and Pesa Bazaar has. So you can see direct plus organic search. It's basically 32 plus 48, and 80 to 90% of their search is directly either coming to their website or they're searching for policybazaar.com or pesabazaar.com, right? So that is the kind of brand recall this Policy Bazaar has. Huh. Uh, now, another characteristic of a good, strong business is that they're the lowest cost producer. So if you look at the example of PKT, uh, they are, if I compare to the Michelin, which is the global leader, uh, in terms of raw material cost, probably Michelin is an example, as an advantage. But when you compare it on an employee cost basis, our employee cost is significantly lower than that of a Michelin, obviously because India is a low labor cost and everything. But naturally, this gives BKT an edge in the market, which has resulted in BKT having EBITDA margin of 24-26% compared to 17 to 19% for the Michelin. One interesting thing why we are you're seeing the raw material cost as a percentage of revenue being lower for Michelin and higher for PKT is something that Michelin sells for 100, BKT sells for 80 rupees. And when you do that, naturally your raw material cost as a percentage will increase. But if BKT sells the same product for 100 rupees, the raw material cost would be same, more or less. So naturally, because of low labor cost, BKT has a huge advantage in India, uh, which is why it is able to compete in the international market. Take me on this slide. Now coming to the third one. So having backward and forward integration again gives you a cost advantage. So for example, if you again take the example of PB FinTech, right? So what they did was uh, until 2021 they were actually an web aggregator and not insurance broker, which they currently are. Now the major difference between a web aggregator and insurance aggregator is that uh, you first cannot assist, you cannot have claim assistance. Now, for example, if let's say in 2020, I were to go to Policy Bazaar and buy their policy, I would have bought the policy, but जब claim assistance का time आता ना, तो policy से बोलता भाई मेरे से तो नहीं होगा, तुम देख लो कहीं और, तुम सीधा HDFC लाइफ या ICICI प्रू लाइफ या उसकी वेबसाइट पे जाके अपना claim ले लो, हम लोग उसमें involved नहीं हो सकते, right? which acts as a hurdle कि यार मैं तुमसे ले रहा हूँ एंड तुम मुझे सेटलमेंट में हेल्प नहीं कर रहे हो, राइट? बट जैसे ही तुम इनको वो इंश्योरेंस ब्रोकर का लाइसेंस मिला, दैट चेंज्ड फॉर देम. Secondly, being an insurance agent, broker, whatever you may say it, if I'm selling insurance, my main incentive is to earn the trail income because day one पे मैं जो effort डाल रहा हूँ मुझे वो trail income कमानी है, right? Being an aggregator, उनको life insurance पे वो trail income की permission नहीं थी by IRDI, right? Which significantly hindered the profitability obviously, but तो उसके बाद वो भी चीज उनके लिए enable हो गई. uh, just in mutual fund there are sub distributors that you can hire. Insurance maybe you can hire your basically sub agents which are called POSP network, right? तो ये सब चीजों की वजह से essentially what happened is कि PB Fintech को basically उसने forward integrate किया अपने business में. उसने वापस and recently in 2023 they got री-इंश्योरेंस ब्रोकर लाइसेंस. तो बेसिकली जो री इंश्योरेंस होता है कि किसी सपोज HDFC लाइफ ने या LIC ने कोई इंश्योरेंस लिया, what they do is they sell that bulk of the insurance to some third party reinsurance to navigate the risk. Now PB Fintech can even become that broker between those. So what they are doing is essentially इसकी वो लोग forward integrate करते जा रहे हैं अपने business के अंदर ही insurance के अंदर और penetrate करते जा रहे हैं to increase the product offering, right? Another example if I have to take is of IOL Chemical. So again, IOL Chemical is a market leader in ibuprofen. And why this has happened is because उसने KSM, not even intermediate, KSM तक उसने अपना basically backward integrate पूरा करके रखा है, right? And generally होता कैसा है कि जो regulatory market होते हैं, your margins are tend to be better in regulatory market compared to a semi-regulated market, right? So they're forward integrated and US, Europe, Russia, ये सब market में भी they are selling their product. तो एंड टू एंड KSM से लेके तुम रेगुलेटेड मार्केट में बेच रहे हो तो तुम्हें द मार्जिन्स दैट दे आर गेटिंग इज फिनोमिनल इन ibuprofen एंड एक लीडरशिप ऑटोमेटिकली एस्टेब्लिश हो गई व्हेन यू कंप्लीट एंड टू एंड सप्लाई चेन में होते हो. तो नेक्स्ट एग्जांपल इज साधना नाइट्रोक्रेम व्हिच आई थिंक संजय विल टेक.
Sure. So, in the case of Sadhana Nitrochem, so over the years, Sadhana Nitrochem has been into the specialized in nitrobenzene related products. So, over the years, they are only focusing on towards the nitrobenzene. Now, recently, so over the years, nothing has been changed in the company. They are the largest or specialized producer in ODB2. Then there is a largest producer in MAP. Recently, very recently, they cracked the PAP version, para-aminophenyl version from the green energy. So that gives an edge over a period of time. So how they are forward integrating themselves in the value chain of nitrobenzene, and from that itself they are creating themselves a very good in terms of margin as well, and in terms of product related portfolio as well. So in the case of PAP as well, now they are moving towards hydrobenzene, which is again would be so to prepare a nitrobenzene or PAP, you require nitrobenzene and water in the plant. So for the water, for electricity and water related products, they are doing a 15 to 16 megawatt of hydrocarbon through the form of renewable energy. So they are moving towards end-to-end value chain, and that will going forward will lead to a very good stabilize in the specialized business of nitrobenzene, and that gives them edge over a period of time. So that's how for a company which is present in across the value chain and focus on one particular value chain and understand the value chain, will form a very good part of their journey going forward, or in the existing plan as well. Yeah, over to you, Navid.
Yes, I think after discussing brand recall, low-cost producer, and backward and forward integration, I think we have few companies who enjoy revolutionary technology, right? Yeah. So there's a company called Affle India Limited. Now it is into performance-based marketing. So the company provides marketing services which are only and only specific to the mobile device. So now how the industry globally operates. So globally, this industry does not operate in a ROI driven model. Now, globally, the industry operates either on a cost per click basis. That means the service provider charges its customer for showing the advertisement based on clicks on that advertisement, or it also operates on a cost per impression model. Now, in both these models, the advertiser is unable to understand the return on investment which he is getting on spending behind that particular advertisement. Now, FL, which is an Indian company, proudly has challenged the traditional way of doing business and has come up with a model which is called CPCU, cost per converted user. Now, how this model works is that if FL is given a particular task by its client, let's say, for example, there is a company which wants more and more users to download its app, and that company gives FL an opportunity to provide its services to that company, saying that, okay, boss, I want more and more users to download my app. Now, FL will only earn money when a user downloads its app versus other traditional methods like CPC and CPM. Now, here, when a user downloads its app, you can, the marketer can understand the return on investment which he or she is getting based on his investment behind marketing. So that is how FL has traditionally changed the way of doing business traditionally, right? And over the years, FL has done phenomenally well in the CPCU side of its business. So if you see the amount of converted users and the growth, the converted users have grown at a CAGR of 47% in the last 5 years. And similarly, the CPCU revenue of the company has grown at a CAGR of 56%. Currently, if you see, more than 95% of FL's revenue comes from this CPCU business. And that is what we believe is a revolutionary tech which FL has created for itself, which even Western counterparts are not able to do. So that is why we believe FL has portrayed characteristics of a strong business by developing a revolutionary technology for itself. Next, we have, there are a few companies who create such a relationship with their customers that relationship itself gives them an edge over competition, and therefore they end up becoming strong businesses. Now, PI Industries is a premier example of how relationships are managed. So there is a custom synthesis business of PI Industries, which is nothing but its exports business, where the company exports its products to the globe, across the globe, to clients. PI Industries started doing this business at a very nascent stage and tied up with a few Japanese customers. Now, mind you, working with Japanese customers is extremely difficult because they are very finicky on quality as well as efficiency. So over a long period of time, what PI has done is PI has built such strong relationship with its customers that PI today, as it's mentioned in the conference call by the management, that PI has ranked among the top 3 CSM players globally. And the company has, been doing remarkable business in terms of complex operations, right? And the management also goes on to say that our relationship with global innovators have grown deep, both at a product sourcing level and also at a process level, right? So the current virtuous cycle which PI is currently witnessing. So we all are aware that the chemical industry is currently going through tough times, but PI is one player which has stood out and which has defied the current trend and has been showing remarkable growth quarter on quarter. That is, only possible because of the strong relationship with PI, which PI enjoys, and the reason that it operates in early stage molecules, which are generally high growing in nature. Second example of such relationship can be observed in Varun Beverages. Now, Varun Beverages is working with PepsiCo in India, is the largest bottler for PepsiCo in India since the last 3 decades. And their operations currently span into 6 countries. Now, very recently, what the company has done is the company has acquired a company called Bevco. Now, Bevco is engaged in the business of manufacturing and distribution of products, under the brand PepsiCo in regions like South Africa, Namibia, Botswana, etc. Right. So now with this acquisition, what Varun Beverages will end up doing is Varun Beverages will deepen its ties with PepsiCo. Obviously, it has gained a lot of trust of PepsiCo because again, it has been into association with PepsiCo since the last 32 years, and 90% of 90% of the volumes which Varun Beverages currently does comes from the brand PepsiCo. So this is another example where a long relationship is becoming even stronger, and that is giving Varun Beverages an advantage over other players in the market and creating a strong business for Varun Beverages. So after discussing how customer trust and relationship with the customer becomes a very strong moat for a company, there are a few companies which have shown a characteristic of innovating constantly. We believe IEX and APL Apollo are very good examples which fit into this constant innovation category. So if you look at IEX, so when IEX initially started its business, the kind of products which you are able to see on the screen right now were not present. Over a period of time, with the help of the feedback received by the company from the market, with the help of constant thought process around how to make the business better, IEX has managed to constantly come up with newer and newer offerings, which has become a boon to a lot of its customers, as well as and eventually the company, because if your customer is happy, eventually your business does well. So IEX is one such example where company has constantly come up with new products, constantly innovated, trying to stay ahead of the curve, and obviously has gained benefits. You can currently look at the market share which the company enjoys. It's basically a 95% plus market share which the company enjoys. So a large part of this credit goes to the constant innovation which the company has been involved into. Similarly, APL Apollo, again, a very well-known company, has created a lot of wealth for its shareholders. Now, if you go, a couple of steps deeper and try to understand what has been the secret sauce or what has been one of the, components which has delivered such kind of, which has resulted in company delivering such strong returns, you will find that company has been number one in India in multiple products. So if you see here, we have taken a couple of snapshots from its annual report. So there are 8 to 10 products or types of manufacturing that the company has mentioned, where company has been the pioneer in India. And that is what, again, the company is only saying that now this out of the box thinking has resulted in, company being much ahead of competition in India, and therefore being able to create the kind of market, therefore being able to create the kind of business which it has created. So I think these are a couple of examples which explain how constant innovation, builds a strong business, right? Then there are business which are incubating smaller opportunities which have a huge potential of becoming big. Now here we in our research journey we came across a couple of examples, right? First is Kaynes Technologies. So Kaynes Technologies is in the EMS business right now and has been growing phenomenally well. The company has been reporting extremely good numbers, extremely good margins. But at the same time, the company has been silently creating two businesses, which has the potential of becoming closer to or even bigger than the existing EMS business. So what is the company doing? So company has backward integrated into manufacturing PCB, which is nothing but the green PCB panel board, which each and every electronic device has, as well as company has backward integrated into OSAT facility. for ease of explanation, let's try to understand. Let's term it as semiconductor space. So company has been backward integrating into manufacturing PCB as well as manufacturing semiconductors. Now, if you look at the size of the industries, uh, if you look at the size of industries in 2022, the semiconductor market in India itself was around $27 billion. Now that this market is growing at a 20% rate and is expected to reach at $80 billion by 2028, right? Now 2028, if you multiply it with the current exchange rate, this market is going to be upwards of 65,000 crores in FY28 if in 2028 if these numbers were to come true. But similarly, the Indian PCB market also is 20,000 crores. It was 20,000 crores in FY20 and is expected to become a 52,500 crores market by FY26. Now, both these, so currently, just to give you a perspective, currently, Kaynes clocks a sales of around 1,500, 1,600 crores. Now, even if Kaynes is able to, take on a small pie of both these markets or any one of these markets, Kaynes will end up making a large business out of these forays which it has made and has backward integrated itself into manufacturing PCBs and also giving semiconductor services. Similarly, we have MCX, right? I think Parth can give us a better idea here.
So, MCX started the gold options contract, and they started with gold options contract back in 2017. And what if you observe the chart, initially in start 3-4 years there was not much response or not much participation in the volume for the option contract. But post COVID, things have picked up. And if you look at the options volume, it has surpassed the futures volume, which was traditionally their main product, right? And to a very large extent. Plus, today options revenue almost contributes equally to futures revenue, and it's growing at a very rapid pace. So basically, how something जो उसको 3-4 साल तक क्लिक नहीं हुई, लेकिन अचानक से वो प्रोडक्ट क्लिक हुआ, and it has significantly changed the growth trajectory for MCX. जो essentially post the 2013 their fiasco, it was an ignored stock for all the investors. But currently, if you look at the kind of volumes that they are getting and the kind of growth that they are able to command, plus other things have also are played out for them, which are going to result in margin expansion and everything. But so how the one product has changed the trajectory of a company which has been dead for a decade basically, right? Yes, Navid. I think next example is of leverage. So it's a quantitative characteristic that we see in a business. So what happens when you take excessive leverage is that your flexibility reduces significantly, right? That is what happened with SW Solar, Sterling and Wilson. So pre-COVID they were heavily leveraged for many and number of contracts that they were to execute. Now because of adverse business environment plus the fixed payment that you had to do, this resulted in they're missing the payment and getting into the bankruptcy. Obviously they've revived since then, but this is what happens. A similar thing happened with Suzlon Energy as well, right? We all know the example. So high leverage with adverse business environment is a deadly combination. Need to be cognizant of. Everready, Sanjay can take it.
So yeah, so as we all know, Everready is a very strong brand into the battery and flashlight segment. So they command in the battery segment, they command 53-54% market share, and in the flashlight also they command 55% market share. And this is a very good business. They are running like the very good business promoters. So recently, because of BM Khetan, the group promoter previously, the group promoter BM Khetan, because of their problems into the group companies. So what they did is they have pledged the Everready and McLeod Russell shares, and they have developing a company by the name of Engineering and Construction Company, McLaren Bharat Engineering company. So over there is a 3,000 crores or debt into the books, and of lately, that that debt has become very harmful in a way of the group companies. So therefore McLaren Russell and Everready face a problems, and so that the Everready promoters, the BM Khaitan Group, has their shareholding has reduced from 39-40% to 5-6% in a FY21 time of phase. And during that time period, Burman family, the promoter of Dabur Group, has started buying the company. So before the thought process of the Burman family to buying the company was to help the Khaitan Group. But of lately, they realized that the Khaitan Group cannot run the business, or has the visibility to run the business, and they take over the business. And after that, as we all know, Burman family has been turning around the business, and this business already command a strong brand recall. But because of group level problems or group level leverage, if I tell you, the very good business or the cash cow business has been spin off and faced the issues by the erstwhile promoter, and now the new management and new play into the pictures.
Yeah, so now that we have, understood how leverage, is really harmful, and I think multiple examples can be cited. We have just cited two examples because of, limited time. Now, secondly, all of us have, listened to this fact that, go for companies which generate high ROCs. Now, recently, so what we do is whenever we zero down on studying a company, we run a model called an accept reject model. Now, the reason for running an accept reject model is simple. We can come across glaring irregularities. So the way we have designed the model, it helps us to see glaring irregularities upfront, because as all of you would appreciate, that we have limited time and limited bandwidth, and therefore we cannot end up studying each and every company that comes, that passes through our eyes. So we have to have that minimum, criteria decided that, okay, after the minimum criteria are met, I will go ahead and look at this company. So there we were studying this company called Plastiblends, and that is where we came across this kind of numbers. If you look at the ROCE trajectory of the company from FY14 to FY23, it has been sequentially dropping like anything. So from a 22% ROCE to a 6% ROCE. Now the company is in the business of manufacturing master batches. There is a commoditized business, and that is what indirectly the company is also trying to tell us here. So this is a snapshot from the annual report. So annual report में यहाँ पर company ने क्या बोला है कि there was intense competition and pricing pressure from established as well as new players, and company has strategically decided to absorb the input price rise during the year. So this is just the situation which played out in FY23. But if you look at the ROCE trajectory, it is continuously falling. Now, when we look at such kind of businesses, the first message which our mind gives us is, okay, boss, you must ignore this business. But at the same time, an additional point which not most of the research analysts or not most of the investors try to think is that concluding at this point may not be enough, because what if the company is currently putting efforts which can drive this ROC, which is currently standing at the bottom, from there at the a better level compared to current scenario, right? So looking at the ROC is not somewhere we conclude our analysis. We try to understand if there are any catalysts involved which can drive this ROC higher, right? And similarly, in Plastiblends, this company started, so it ventured into something called engineering plastic compounds, right? And the company is also mentioning the fact that considering the strong positive response which the company is receiving in the engineering compounds business, they are also contemplating a expansion in the near term. So I'm not saying that because of this expansion of Vicor, because of the getting into engineering plastic compounds, the ROC will, start going up. But the point which we want to drive home here is that simply concluding your analysis by looking at a downward trajectory in ROC may not be enough. You should always try to look for catalysts if they're present. If the catalyst is not present, you can always give that company a pass. Now, after understanding how to look at ROCs and how ability to generate good ROCs is good, that you already know. Repeat customers is something which also gives us a sense of the strength of the business. Here we have Ethos example to share with you. Over to you, Parth.
Having a repeat business, the main advantage is that, and especially on a consumer side business, where on day one the cost of acquiring the customer is very expensive, and you want कि जब मैंने वो customer को acquire करने में खर्चा किया है, तो बार बार मुझसे खरीदना है, because incremental cost is less, right? So Ethos has managed to crack that model where the repeat customer, which was almost 1/3 around COVID, is almost close to 50% today, right? So 50% of the sales is coming from the repeat business, close to 50%. So that's an interesting number to have, right, in your business. कि आधा बिजनेस तो होने ही वाला है, कुछ भी कर लो, मैं मार्केटिंग कल नहीं करूं तो भी आधे लोग तो आ ही रहे मेरी सेल कर दें, राइट? सो very sweet spot to be in, right? And this number is actually increasing.
Then there are some players who are extremely dominant leaders. Now, the example which we would like to cite here is of Polycab India. So if you look at this chart, which the company has presented in its presentation, Polycab is doing a 12,500 crore sales in its wires and cables segment. Now, if you compare Polycab with its closest peer, Polycab is 2 times of its closest peer and almost 2.5 times of the peer who ranks number 3. Company goes on to say on its con call that we are perhaps the only company on the continent. Let me repeat, we are perhaps the only company on the continent to manufacture each and every type of cables there can be manufactured. Now, इस तरीके के statements और इस तरीके का data जब आप company की तरफ से आपको मिलता है, that gives you a sense that company has been dominating the industry like anything, and company has created something for itself which is helping it dominate the industry in such a big way. So that getting these kind of information, getting these kind of data can also indicate that the company has built a strong business for itself. Next up, we have a category called strong challengers. Now, this is the most interesting type of businesses because the most interesting part of these businesses is their rate of change is extremely positive and the rate of change is extremely fast as well. So strong challengers करके जो ये category जिसको हम strong challengers कहते हैं, they are the businesses where maximum wealth creation generally takes place, but at the same time it's extremely difficult to identify these kind of businesses because a lot of businesses show great promise but very few are able to deliver, right? So Angel One is a prime example here. Sanjay, you can take it over.
So yeah, as Navid said, the Angel One, during the time of COVID or before COVID, if I say, and if I tell you a decadal story back there from FY10 to FY20, we will not see Angel One, or very less market share used to be commanded by the Angel. So over the years, over these quarters, quarter on quarter, Angel One has gained a market share like anything, and they are developing a product, developing a technology, developing a team in such a way, and so they disrupt the industry. They are becoming a big a one time a challenger, now becoming a leader in the category. So Zerodha has cracked the model. After their Angel One has consistently from nowhere in the below 10th or 12th position in the broking industry, from that position to a number 2 player in the industry today, has been a phenomenal journey for Angel One. And this numbers, we have not, so we can always say that when it started, the IPO has been come, the 4.84% market share they used to command. So we will track on quarter, and if we see a jump in quarter on quarter, or a improvement in quarter on quarter, or the change in the business taking place in the company, gives a visibility that company has all the possibilities or probability to command a market share and gain a market share over a period of time. Of course, at the point of time during the 20s, we also have not thought that this can be a second largest player in the industry. But we know that the ability to gain market share has been visible in the commentary, has been visible in their actions, and which has proven them today, and has generated a huge amount of wealth for the shareholders. Over to you, Navid.
Right. Then there are a few businesses which face supplier concentration or customer concentration, and that makes them vulnerable to, facing a lot of risk. So now here we don't have an example from the Indian market, because we believe this example is going to be highly impactful. That is why we have taken an example of TSMC. Now, we have written that it is difficult to imagine a world without TSMC. Now, why do we say that? Right? All the high-tech companies which are currently there, with the likes of Apple, Qualcomm, AMD, Nvidia, companies which are manufacturing high-tech devices, which are manufacturing high-tech technology, all are the customers of TSMC. Now, TSMC is the largest semiconductor manufacturer, or the largest semiconductor foundry in the world, with around 59% market share, followed by Samsung, which is only at 13%. Right? So this is a highly dominant player based out of Taiwan, supplying its chips, which companies like Apple and Qualcomm and Nvidia are taking as raw materials. Now, tomorrow, if something goes wrong with TSMC, all of us understand, and all of us, know that the tension which is going on between China and Taiwan. Now, tomorrow, let's say if some geopolitical tension arises or escalates, and if TSMC is not able to deliver the kind of products it is able to deliver right now, in the volumes it is able to deliver right now, I think all the high-tech electronic manufacturers will have a very bad time if that comes out to be true. And that is why US is trying really hard, and US has definitely convinced TSMC to put up a large semiconductor manufacturing plant in I think Arizona in US. And Apple again is going to be the biggest customer for TSMC operating out of that plant. So this is how having supplier concentration can hinder. Obviously, it has not happened in the case of TSMC, but if, as I discussed, any mishap happens, the whole electronic manufacturing industry across the globe can face a really bad time. Similarly, having concentration towards one customer is also detrimental. This recently was visible in one of the companies which has again been a phenomenal wealth creator for its shareholders, which is PI Industries. Now, PI Industries has a premier customer called Kumyai Chemicals, which is a Japanese customer. Now, इसमें क्या होता है कि when PI operates with a particular customer, they enjoy a relationship which lasts for decades. And if any innovator is able to crack a particular molecule which has a strong opportunity size globally, it eventually converts into large business for PI. Now, Kumyai has cracked a molecule called pyroxasulfone, which is growing so rapidly that it is currently forming 35 to 40% of the custom synthesis revenue, which is the export business of PI, which is close to 75% contributor to current business. So out of that 75%, 30 to 40% comes from this product alone, and that product is on the name of Kumyai Chemicals. Now, currently, what happened was recently Kumyai announced its Q4 results, and Kumyai in its Q4 results gave a guidance that they might see a degrowth in the operating profit in the coming year because of this pyroxasulfone getting going generic in certain markets, right? Now, this obviously PI has shown a lot of confidence in its commentary, in its conference calls, but this currently has maybe made the market tensed about how the future is going to look like with concentration to pyroxasulfone, which is so high, and that is going generic. Similarly, another molecule which was an erstwhile blockbuster product for PI, which was nominee gold, was also innovated by Kumiai Chemicals. So these kind of having concentration to one customer, having concentration to one blockbuster product can be detrimental to companies, which can be a source of risk for investors like us, and we have to be cognizant of this fact. So I think with this, we have covered all the qualitative as well as quantitative characteristics, which gives us a sense that we are currently looking at a business which is strong. It is not that a strong business will only have one characteristic out of this. These characteristics have a nature of coming together in bunches, right? I think